Studios here in Kokomlemle, Accra. This is Joy News, and you're welcome to Ghana's leading business analysis program, Beyond the Numbers.
This is the only show dedicated to the market development that brings you updates on deals and key headlines shaping our business today.
Well, Winston, talking about shaping our business today, a very big story that broke over the weekend is the Israel-US and then the Iran, crisis happening. And a lot of people are saying that, well, how fast are we going to feel the effect? And I'm thinking, even though NPA has come out to say that, oh, for a couple of weeks we're sorted, we have petrol and all of that, still, we don't know how long this is going to, take, how long it's going to take to end. And if it doesn't end anytime soon, it means that we're going to have some pressure, see some pressure on our inflation, food prices, everything is going to go up.
This brings in the Chamber of Petroleum bulk oil distributors. They are key suppliers to the OMCs and stuff. And so we'll be speaking to them to understand how much of a reserve we have. Already, MP has given indication, but they have to tell us about their capacity, how long the reserve can hold, depending on several OMCs we have on the market and how basically they can meet consumer demand. Don't forget, it is not just consumers, ordinary cars or private cars and vehicles. We have factories and industries, the amount of supply that they need, and our capacity as a nation to meet them during this geopolitical period where tension is quite high. And this and more coming up on the show today. Amazing. We'll take a short commercial break. When we come back, we'll bring you the understanding here on Market Watch. So stay tuned after this break. To the Market Watch, where we're taking you straight to various happenings across the world. Michelle?
Well, first definitely is on our energy matters, as well as the global prices have risen after at least 3 ships were attacked near the Strait of Hormuz, and as Iran continues to launch strikes across the Middle East in response to ongoing attacks by the US and Israel.
Meanwhile, the National Petroleum Authority, NPA, has moved to calm fears among Ghanaians, assuring the public that the country has enough fuel stock to last several weeks, despite the escalating Middle East crisis following recent Iran attacks and regional tensions.
Well, away from that, banks in Ghana recorded 15 billion Ghana cedis as profit for the year 2025, compared to 10.4 billion Ghana cedis in 2024. According to the Banking Sector Developments report, this was a 43.5% growth compared with 26.2% the previous year.
Also, DataBank Research is predicting a relatively stable cedi in 2026, with year-end depreciation of 7.20% to the US dollar. This means the cedi will end 2026 trading at 12 cedis 85 pesos to 1 American greenback.
And a thorough fact check by Joy News Research reveals employment increased by only 690,000 between the first and third quarters of 2025, contrary to the president's claim that 1 million people secured jobs during that period.
Yes, we've got more on the show for you on Market Watches next. Stay tuned here on Beyond the Numbers, where we test the pulse on geopolitical factors as well as the key market indicators here on Beyond the Numbers. Stay tuned right after this break.
Beyond the Numbers. Still on Markets Watch, we are analyzing what is happening on the geopolitical space, where there's tension in the Middle East, and Winston will be focusing on that on big analysis. But before that, I want us to look at, commodities. We will watch the commodity space before we cross over to DataBank Research to speak to Grace Monanyun. And I want to start off with this, where we are keeping our eyes on 4 commodities. And first one definitely is Brent crude, where week to date, what you see on the smart wall tells you that week to date, or week to today, a week ago, prices have soared by some 9.4%. And in fact, increasing from 71.4 dollars per barrel to now 78.1% per barrel. What we are checking is that a week ago, this was where it is. Currently, it's up by some 9.4%. You take a look at crude oil itself. The first one we took a look at was Brent crude. Crude oil a week ago was $66.2 per barrel. Now we are talking about 71.3 dollars per barrel. Within this very short period of about 6 days, we are talking about some 7.7% increase in crude oil prices. And Winston, definitely you know what is happening to them in the Middle East is having an impact on this.
Projections by major exporters and importers, and this is significant because as of now many countries are anticipating its ripple effect, but the pass-through effect will lag between 2 weeks. Basically how countries are going to manage based on their reserves is what we are looking forward to. Already we'll be speaking to Seaboard. Ghana MPA have made assurance that we have enough reserve to withstand about 5 to 7 weeks. But how long will it take? These implications on the Chinese market are all the dynamics we'll be touching on today. And let's see how will exporters fare.
Well, Grace will have a bite on that. But before that, last commodity, 2 commodities I want to take a look at, which is gold and cocoa. What is happening in that space? If you look at the gold space, a week ago was selling some $5,209 per troy ounce. Now we are talking about 5,379, up by some 3.3% increase in just 7 days. Talking about cocoa, we've said a lot about cocoa on this show. And Winston, within a span of just a week, cocoa has dropped by some 12%. And we are talking about moving from $3,361 dollars per ton now to $2,957. We know Ivory Coast has followed Ghana, farm gate price. But the big question, Winston, is how is this going to play out even as we start to introduce the 2027-2026 season in August and September? Where do you see the prices being? Currently around 2,957. Where do you set up?
I project this price are going to remain stable for the cocoa sector, considering the factors and to play. Various agencies that trade cocoa now have to cut down their rates, minimize, because there's so much in the warehouses currently. And so they are careful how much they flood into the market. And when there's so much in the market, the prices is likely to fall. But when there's lack, we're going to see mass supply. Already the European countries, especially major cocoa manufacturers, are also cutting down their stock, now going for more grounded cocoa export than raw beans. So it's high time Ghanaian manufacturing company decide grinding our beans. Already the finance minister has projected that there's going to be about 50% domestic production. Already 10 processing companies are in the country, and they said they can meet the capacity. Now for gold, due to the tension happening between Israel, US, Iran, all commodities or investors want safe haven. And we are going to see the commodity price rising in the medium term, especially for gold, rising by 3.3%. This week alone, the jump has been quite marginal, but anticipate that it's going to go high going forward.
Well, talking about markets, I think it's best we cross over to Grace Monanyun of Data Bank Research, who is joining us via Zoom. Grace, how are you doing?
Well, how is the team doing?
Well, I mean, I'm sure you are following what is happening in the Middle East, and it has a lot of impact on Ghana, because what I was checking this morning, I was having a conversation with Winston about how the dollar index has gone up. And you know that when dollar index goes up, it means that investors will begin to look at another alternative, which is whether to put their money in dollars, buy dollars, or maybe, what we have seen is that there's a lot of capital available in the local space. The key question is, are we likely to see capital flight because of the increase in the dollar index as a result of what is happening in the Middle East?
Yeah, Isaac, I think it might be too early to conclude we might see possibilities of capital flight, considering that our local market is doing well. With the exception of the primary markets with yields compression here and there, we believe investors will not be in a rush yet. It's a right time to go bullish on oil, but we don't think investors will be in a rush yet to look out for safe haven assets in terms of going in for FX and denominated assets, or even going in for demanding USD for a safe asset. I think they might want to take a step back to assess what exactly will be the conclusion of the matter in this whole crisis we see in the Middle East.
Grace, interesting enough, this morning, most of the stock markets started low, from the German stock market, Italy, the UK, the US, all of them started low. What kind of signal is it giving basically to investors, considering the fact that this tension has already started giving negative show?
Yes, I mean, when there's a lot of tension like this, it's usually normal that you see investors taking a step back because you don't know what exactly or how the economies will fare. So you just want to be calculative as to where you define your capital for acquisition. But what I would say for the Ghanaian market is the opposite. We rather see continued increased interest in the stock market, and already we've seen 8 gainers on the market, no laggards. And I think it's a step in the right direction for the Ghanaian investors. But for the other economies, I believe because they are more directly exposed to the happenings on the Middle East, they might want to take a step back, assess the situation before they distribute their capital for investment.
Now, away from the Middle East, I want us to look at companies that have currently released their reports, financials. MTN declaring huge profit, other commercial banks also declaring huge profit. Do you think that this could be some sort of like a shock absorber to tell local investors that, look, invest here, it will look good for you in the following year, maybe possibly than looking at other foreign assets?
Yeah, I think that is one factor. I mean, investors consider a lot of factors during investments. One would definitely be how strong your cedi is. If at the end of my investments, I'll still not be worth anything if I should have invested outside of the Ghanaian economy. Investors may want to look out for whatever is outside other than patronizing what you have domestically. Another factor investors may look out for will be inflation, because you don't want inflation to erode of your capital gains whatsoever. So I believe the strong performance of the companies is one key factor investors look out for in terms of investing in these countries, even what companies will invest on the exchange. So that is one factor. The other factors will be the two I mentioned. So yes, considering that inflation is beatable, inflation is within range, considering that stability cedi is currently achieved, investors may want to remain on the domestic market, and also looking at the fact that these companies listed on the exchange are performing well.
I want to understand from you, this February ended with year-to-year trade of composite index on the GSE going above 45%. What do you make of the assessment for the month of February?
Yes, we expect the continued interest towards into the month of March. We expect that investors continue to favor the counters listed in the exchange. Predominantly, like I've been mentioning always, investors are looking out for dividends, announcements, and payments. And we believe this month is when most companies will come in. MTN is doing 40% a share, which is great. We're away from the 24% they did somewhere last year. We believe that investors will continue to be on the lookout for some of these announcements and stick onto their investments on the domestic equity market. I mean, most of them will be looking out for capital gains, all right, but I mean, what will influence their decision greatly will be announcements of dividends, whether they want to accumulate more or sell off after dividends. That will depend on how much these companies announce.
Finally, on currency movements, I believe that what is happening in the Middle East will definitely have an impact on the local currency. The cedi started very strong today, 10.7 against the US dollar. The question is, should this war prolong, are we likely to see a weaker, stronger, or a very stable cedi? Because your organization is predicting, year end, about some 7% depreciation for the cedi. But looking at what is happening in the Middle East, are you likely to revise your numbers?
Right. It will be too soon to say we will revise our numbers. This is just one of the occurrences that may hinder the performance of the cedi. We also have the likes of BOG relentlessly helping the city stability, looking at the intervention we already see on the market. I mean, I believe to some extent the city already is, in a good shape to perform better, or I would say has some stability. We are experiencing some stability currently on the market, and we don't think it will erode off anytime soon. But holding other things constant, we believe this war will have some impact, negative impact on the city's performance. But I wouldn't say it will totally erode the stability we are currently seeing.
Well, Grace Bonanyun of Data Bank Research, thank you very much for making time to be here on the, Beyond the Numbers with us. We will have, a full analysis on the president's claim on the number of jobs created within a certain period. We've done the fact-check report. Caleb Ziblim and Michelle Jacomb will join you very soon to break this down, how we got our verdicts and how we concluded on what we put out in terms of what the story available on myjoyonline.com. So still stay here. This is Beyond the Numbers. Caleb Ziblim and Michelle Jacomb will join you with Fact Check very soon.
You're welcome back, and this is Beyond the Numbers, and this is definitely big analysis. I am Michelle Jacomb, and of course I have with me. Well, just like Kofi and Winston mentioned, Joy News Fact Check, something that was mentioned by the President of Ghana during SONA 2026, that was just Friday, concerning employment. And I'd like to take this video, take a look at it, and we'll be right back.
Currently between 18 and 20%, freeing up credits for businesses and households. And according to the Ghana Statistical Services, over 1 million Ghanaians have found employment between Q1 and Q3 of 2025. Mr. Speaker,
well, there you have it. In fact, the expression in the room alone looks like there were people actually doubting. Obviously, the minority will always be the minority. But what did we find? How did we come about our findings, Khalid?
Yes, Michelle. So this has been in the media the whole of today on X and on Facebook, and people rebutting and all of that. So we decided to break it down a bit for the audience to understand where we got the numbers from. And again, this is all from the Ghana Statistical Service. It's available on the website. So according to the president, which you guys heard, 1 million people were employed from the first 3 quarters of 2025. Yeah. 1 million people. So it means that at the end of 2024, the people that were employed, if you get to the end of the 3rd quarter of 2025, should be increased by 1 million people. So at the end of 2024, in the 4th quarter, there were 12.73 million people employed. 12.73 million people. Okay. Then, in the 1st quarter of 2025, 13.09 million people were employed. Okay. 2nd quarter, 13.44 million people were employed. In the 3rd quarter, it dropped by a bit to 13.42 million people being employed. Again, if you do a simple arithmetic, at the end of the 4th quarter, 12.73 million people were employed. In the 1st quarter of 2025, it increased to 13.09 million. Okay. Once you do the subtraction, that's by 360,000 people. So in the 1st quarter of 2025, 360,000 people were employed in addition. In the 2nd quarter, it moved up to 13.44 million. So the addition again is 350 million people. So let's just recap a bit. So in the 1st quarter of 2025, 360 million people were employed in addition to what was left behind. The 2nd quarter, 350 million people again were employed. So if you do the addition, that's 710,000 people. So 710,000 people were employed within the first 2 quarters of 2025. Then the 3rd quarter, employment dropped from 13.44 million to now 13.42 million. So about 20,000 people left employment. So unemployment increased in the 3rd quarter. So in the 1st quarters, if you remember, 710,000 people were employed. In the last quarter, 20,000 people left. Once you do the subtraction, that's 690,000 people. So this is way below the 1 million people being employed in the first 3 quarters of 2025. But then again, if you want to be the devil's advocate and say, even the 20,000 people, they were still employed before they left. So you can add that to the number of people who actually got employment, even though some of them left employment. So if you forget about that, we still have 710,000 people being employed in the first 2 quarters. So again, both of the figures are way below the 1 million. And then this is all from the Ghana Central Statistics.
But are we able to find, or did we find what happened? Why do we have that number drop from the 13.44 to 44 to the 13.42? Are we able to figure out what happened there?
No, we don't have the exact reasons for why people left, but then this happens all the time. If you look at the data for the past 10 years, every single time people leave the markets, people come back. Some people travel, some people lose their jobs, some businesses close down. So when all that happens, we see an up and down movement. So the flow from the end of December 2024 to the 3rd quarter of 2025, we had 710,000 people entering employment. At the end of the 3rd quarter, 20,000 people left employment. So the total employment within the first 3 quarters of 2025 is 690,000 people.
Great. And are we also able to tell, yes, they were employed, where exactly, which sectors were they employed to? Do we have all of that information?
Okay, so the Statistical Service doesn't break it down to the new additions where they came from, but then we know that historically Ghana's employment is largely driven by the agri sector, followed by the services and then industry. Our industry has been lagging a bit, but then the agri sector, so it's safe to say that most of the people that were employed were probably employed within the agri sector. But then the Statistical Service doesn't break it down for us to know when
exactly
an additional employment, where that person went, we don't have that data yet.
Great, thank you very much, Caleb. Now, definitely this is from the Ghana Statistical Service, so it's not as if we made up a story. So here's a perfect breakdown, and for more details, please go on to myjoyonline.com. And of course, you're still watching Beyond the Numbers. Please stay for big analysis.
Saudi Aramco has actually confirmed that they've taken a hit in terms of what is happening in the Middle East. But it could be far away, but definitely it's going to have an impact on Ghana economically and socially, because we understand not just on the energy sector that we possibly could take a hit. About 7 airlines have decided to shut down or decided not to take any new flight to any other place, especially in the Middle East, because of what is happening. And we have Ghanaians currently who are in Saudi Arabia and other parts of the Middle East who are not able to come back home because of what is happening. So it goes beyond just the energy sector or maybe the economy. It has different facets attached to it. But here on Beyond the Numbers, we are going to focus on the energy aspect, the economic aspect, the geopolitical bits of this war, that we are seeing. Who are the players? What is it likely to be in terms of impact for developing economies like Ghana? And if you come to analysis, when it talks about the Middle East, Winston Taki is very strong on that. Caleb Zeppelin is also very strong on that. They've both joined me for that analysis. We have another guest, Winston.
Exactly, Dr. Patrick Ofori, the CEO of the Chamber of Bulk Oil Distributors, is joining us live right now. Doctor, if you can hear us, want to confirm your presence with us this afternoon. Hello, Dr. Patrick.
Hi, good afternoon.
Good afternoon, Dr. Ofori. It's good to have you with us this morning. We would like to start with him, basically. Because, there are several conversations. And as of now, there are several meetings ongoing in the country. He is leading and also having consultation with several players in the industry. Now, I want to get from you, how is the sector faring, considering basically what is happening in the geopolitical space as of now, and how ready are we in terms of our reserve analysis, and also your bulk reservoirs, are they full, and how long can they withstand?
Thank you very much, and I would like to use this opportunity to extend a warm regards to your viewers and listeners. Well, I think one of the best things that happened to the country was the deregulation.
Okay, we're trying to get Dr. Patrick back shortly.
As I'm currently...
Hello, Dr. Ofori, can you hear us? Hello, Dr. Ofori.
I can hear you.
Please go ahead.
Can we?
We can hear you. We can hear you.
Yeah. So, so one of the best. So one of the best things that happened to Ghana is a participation of the private sector in our energy mix, especially within the downstream petroleum sector. So as I'm speaking to you, the issues that are going on, well, it may have a long-term impact, but as we go through our various scenarios that we are planning, if it goes like it happened in June when Israel attacked Iran and the Strait of Hormuz is to be reopened within the next 10 days, then we don't actually expect a lot of damage to us as a country. We currently have almost 7 weeks of stock, and also there are a couple of vessels that are lined up already in our waters to this time. So in terms of energy security or supply, we may not necessarily have any issues with regards to product supply into the country. What may be the dynamics may impact on us, even that maybe we'll start feeling it within the third week or so, whereby if global prices keeps on going up, as we've seen that just as those vessels were hit, and now with Saudi Aramco being hit, we expect that the prices are going to go up. But the downside to that is that as it continues like that, then it also gives Ghana some opportunity with regards to commodities like gold prices going up, and a lot of investors may be dumping the dollar and then giving sending most of their investments into a gold-denominated, a gold commodity to maybe back their currency. Once we have that, then it means our consumers and the general public are also going to benefit from a stronger cedi, which we all know the currency is a major determinant of pump prices within the country.
Now you spoke about the short term, and you said that, well, it's likely that within the next 3 to 4 weeks, we will be okay. But we are looking at the medium to long term, and in fact, looking at the next even pricing window where there are projections that pump prices could go up, because we saw it on the Smart World within a span of just 1 week. Brent crude, for instance, has gone up by more than 9%. Crude, on the other hand, has gone up by more than 7%. The key question is, with the dollar index strengthening, are we not likely to possibly see the impact in the next, pricing window? I
won't necessarily say that, because you look at most of our members who are into these agreements have already taken a position and that the products are coming in already. So you check the advantage that we have as consumers is the competition that happens at the bulk distributors level. There are others who have already taken a pricing position that they've locked in the prices that we are coming in with. Those are going to dominate the market and try to offload most of their product and take advantage as much as possible, whereas maybe those who will be triggering on the day are the ones who are going to suffer the pricing when the next window begins.
With increased competition among several OMCs, how has the off-taking been for you, especially with the increasing number of OMCs as well, and how now they play with the pricing? How many are you able to supply per day going forward?
Well, as the market opens up, there are some element of risk that if you don't do your due diligence, well, there are some of them that even are not in good standing and are also unable to even attract the required financial instruments to back some of the transactions. So I think that one lies with the individual BDCs and how their level of risk level and how much they are able to liaise with them. But the good thing is that there are traditional ones, and gradually you need to also commend some of the Ghanaian entrepreneurs with that element of competition that they've also brought out there. It has also given us the chance, but we currently in a discussion of both the regulator and the Bank of Ghana to also strengthen the credit scoring within the downstream, and also to ensure that all the charlatans and those who invade other government taxes and those who also default in the credit payment that some of our members offered them, we are able to weed them out. But as it opens, you should expect that there are others who would also want to come up with some form of illicit activities that may not inure to our benefit. But I think we have a strong industry, and we are pushing for strong regulatory requirements to ensure that licensing are given to those who can really stand the test of time.
Now, you stay with us for analysis on the smartphone, but even before we do that, I want you to possibly answer this for us. In fact, if you are looking at, what lies ahead in the next window, there are big fears, of course, but you are laying those fears and saying that within the next 3 to 4 weeks, we should be fine. But the question is, we've seen the price floor without this war has gone up has gone up twice in the last 1 month. Are we likely to see the next window? Are we likely to see another price floor? I know possibly you're not in the OMC space, but looking at what is happening and how much you're able to supply in a day, are we likely to see the NPA increasing the price floor to maybe about 12 cedis, 20 pesos?
It's possible because you look at how petroleum pricing is done. And I'm not surprised that even the energy minister is pushing and advocating for a similar situation within the power sector, so that you know that once this is put in, this is the exchange rate is here, the international prices are like this. And if you be fair to our members and then also the regulatory institutions, you realize that when the cedi gains strength and then international price remain relatively stable, prices didn't actually move up. But we've seen that since January, international prices are going up, and from January to date, before only yesterday, you move up 9%. It's moved up gradually about 7% year to date before yesterday increase.
Yeah.
Our major concerns are normally with the exchange rate that we secure from the banks, and we must give credit to the central bank due to that collaboration that we've having, that before even the quarter begins, through our engagement, we are able to know how much the central bank is going to come to the market with. That enable us and help us to plan. And if you look carefully, that has also prevented a situation whereby most of our members goes to the market using what we normally term as a forward pricing. So currently, we are sourcing the currency knowing that this is the rate that I'm getting from Bank of Ghana, and I'm guaranteed that even in the next 2 weeks, I'm going to get this. So you are not in haste or in any anxious moment to send outrageous pricing, outrageous exchange rate into your price buildup, which automatically may even also price you out of the very competitive market that we currently find ourselves in. So that is something that we build on. But my fear with what you just said, with the attack on Saudi Aramco, once Iran retaliation start hitting oil installations and infrastructure, then there is a stronger danger that prices may escalate far exceeding what we are expecting. And by that, you then can see that within the next 2 or so weeks, prices are likely going to hit between 95 to even $100 per barrel. And that will automatically be pushed on to the consumer, since we normally also deal with those indicators in.
We'll come back to you. We'll come back to you on those prices, the projection 90 to 100, and even how much are you getting from local refineries at the moment. But I want to turn attention to Caleb Ziblim, because what we are looking at is the Middle East. How important is this space in terms of global supply of crude? And when we talk about energy, how important is this space, and why should we even be concerned?
To the entire Middle East contributes about 30% of the global oil production. So if you can move to the next slide. Yeah, next this slide.
Yeah.
Okay, so this slide shows you that in the Middle East, where the war is currently happening, this is Israel here and this is Iran.
Yeah.
But then we have Kuwait, one of the largest oil producing countries in the world, right in the middle. We have Bahrain, we have Qatar, we have Saudi Arabia, we have the UAE. and we have Oman. So almost all the countries sandwiched between Israel and Iran are oil-producing countries. And if you add the total Middle East, we have about 30% of oil-producing production to the world market. So once this happens, once there's some destabilization in the markets, you should be rest assured that the entire market is going to be felt. Again, we have indication that Iran, although not official yet, but has effectively blocked the Strait of Hormuz. And if you look at the straits, this is where most of the oil-producing countries pass through to get to the Asian markets. About 30% of the oil from here goes to China, and some goes to India, and then some other.
Europe, you still the same route.
Some
right?
also goes to Europe, but majority of it goes to the Asian countries. So once there's conflict here, it means about 20% of the entire world crude production is going to be affected. So the rest of the 80%, that's where other players have to come in. Now, even though Ghana doesn't directly benefit from Middle Eastern oil, you get a majority of ours from the European countries. Once there's a shortage in the Middle East, these countries then go to Europe for their products. So China, a very large consumer of petroleum products, will now have to look elsewhere because they cannot get theirs from the Strait of Hormuz. Once they are looking elsewhere, it means that Ghana is going to be among the other countries scrambling for what's left on the market. And even though there's some oversupply of crude oil on the market, once players begin to see that there's higher demand or people are scrambling for their products, they will know some artificial price hikes here and there.
Yeah.
But even though we've seen this, the price of crude on the market has not gone up as we expected. Some people thought that when the market opens today, the price goes up to $90 to $100 per barrel. Currently, we're about 78. It reached 80 for a bit and came back to 78. So even though it's high compared to where the Russia-Ukraine war, we're at 78 in May 2022 when Russia invaded Ukraine. We're at the same level. But then what's saving us now is the currency the stability of Ghana Cedi.
Ghana Cedi currently around 10.7. And Caleb made an important point that although we may not face this directly, right, because we depend so much on the European countries for refined crude. And remember that the crude that goes to Europe before it refined and we get it, most of them are actually gotten from, the Middle East. So once it is expensive to transport, insurance costs and all of those things are added, refinery in Europe will be expensive. We will pay for higher Brent or higher refined product when we are getting it into our country. The key question is, $78 is at the panic level?
I don't think it's more of a panic level. I think it's a reactionary level. But markets is just reacting, not panicking. If you look at the past few weeks back, it appeared there's so much supply in the market, and every country decided to build in their reserves. So most reserves are full up. So anything that is coming into any economy right now, for instance, China has about 3 months of reserve cover, and they are quite optimistic that this war will not basically affect them. They have the option to get for crude oil from Russia. So Russia is a good market for China. China needs to meet, right now, China hasn't been able to invest in most of their renewable as backups. Their coal factories, they were advocating for renewables. However, their coal factories are still quite working, so they can decide to diversify their energy mix. Unlike some African countries, it's now important to prioritize our renewable conversation to ensure that these renewables gives you a minimal shock against any unrest that may happen globally. So for Ghana, we have this renewable industry sector that we need to prioritize. But one thing that is quite important for us as a country is how domestically we are ready. Amazingly, Tema Oil Refinery is back on its feet. It's been able to go through its test case. We are yet to see commercialization of their most refined products onto the market. Central Refinery, a domestic private partnership, also is in line meeting the local demand. The Atuabo gas pipeline is also installed, meeting local demand. So this strategic infrastructure is able to help us against global shocks in the medium term. But for the long term, it's important that we ensure that we are able to sink in and make sure our commodities doesn't affect our projection going forward. We can project from our budget how much we want to get from crude oil, how much we're going to get from gold. Gold seems to be one important aspect that we have been able to withstand. Getting Gold Board on track is very important. If we had messed up with Gold Board as this year, waiting for it to happen this year, we would have fallen short. But it's good that we started a year ago, and therefore most licensing coming through to ensure refined gold are gotten appropriately to shore up our reserves.
Cedi is strong. Looks like that is the best buffer at the moment. and it's currently around 10.7. My biggest concern has to do with what happens at the pumps, what is actually fed into our inflation mechanism, the pass-through effects in inflation. The key question is, looking at what we are seeing, we usually, if you look at the supply and demand in terms of fuel, we are saying that we currently have about 5 weeks for diesel and about 7 weeks for petrol. For a space that prices went as low as $60 per barrel, do you think that, I mean, we could have done more in terms of the accumulation of stocks and reserve? Because prices were very low, we could have taken advantage of that and said that we are building reserve for about 3 months, 4 months, and not even start talking about 5 weeks and 7 weeks. But how difficult is that?
I think that the communication is a bit off here, because the reserve that we are talking about, the 5 weeks for diesel and then about 7 for petrol, is not for the government of Ghana. They're the private players with their stock. So the government of Ghana doesn't hold the petroleum products. It's for the private companies. They decide when to bring it in, depending on the factors. The exchange rates, is it doing good? Can we import more? The price of crude on international markets, if it's favorable for them, that's when they can import more. And are they big enough? Do they have enough capital to import more fuel and save for 3 months? Some of them do some forecasting. They expect that in the next few months, price should come down. Yeah. So it's not for the private individual to be having 5 months of reserves for the country.
Well, especially when the price is very low.
Well, it depends.
Or the projection was the price were going to go lower.
But again, if you look at the crude oil charts, you can see that before Friday, Iran was struck on Saturday, but before Friday, the price of crude was actually building up. And if you monitor the space, the entire year, there's been chatter that the US is going to invade Iran. So the price of crude oil in the markets was actually going up, which is why the pricing window, even though US hadn't struck Iran yet, COPEC and the chamber and everybody was saying that the price of petrol in Ghana is going to go up by, I think, 3 to 4%. And that happened. This wasn't because of the US, the Israel-Iran war. It was because the price of crude was already going up on the market. And this was going up because the expectation that US was going to strike Iran, and that happened. So within this past year, there's always been some uncertainty in the market. So if you are going to, plan ahead, you don't know whether in the next few months, US is going to strike, they're not going to strike. Or once US hits Iran, whether it's going to be like last year. Last year, somewhere around here, when Israel struck Iran, the prices went up and quickly came back down. Yeah. So the market is very volatile at the moment. So it's not for the private individual or the private businessman to risk his capital and say, I'm going to get 5 months of fuel for the country. Ultimately, it's about profits.
What Caleb is saying is a factor, because as of now, because of the block of Hormuz, it's important to acknowledge that demurrage prices is going to go up. Insurance cover, because as I hear, most of the insurers have increased their prices.
Some have even decided that the insurance companies in China have decided that, well, we are no longer going to insure your commodities or your product. But I think we need to find out from Dr. Ofori from Seaboard. I mean, we understand that there are hedging mechanisms and you being strategic, but in terms of building reserve, I want to ask, prices went as low as $59 per barrel. Was it very difficult for stakeholders like you to say that we are building reserve for like a month or 2 or 3?
I think you need to look at our economy size. So normally when you hear a lot of the commentators and analysts talking about the government building reserves, sometimes it's good. These are theoretical concepts that if you have, you can. But can you imagine any government entity, let's say BOST, taking a position on a petroleum product for, let's say, about even 4 or 5 parcels? That is costing about, let's say, $500 million. And then when you also have those reserves, you need to have the infrastructure. We don't have that infrastructure to even keep that 5 months reserve. Because recently we were struggling with a lot of demurrage because the expectation of product turnover were that low. And that the BRBs were not moving the product on time. So there are some of the Lacan schedules that they could not discharge because we don't have enough infrastructure to store that 5 months reserve.
If you say we don't have enough infrastructure, I want you to paint a picture for us. What do you mean? How dire is
how much in terms of estimation do you need?
How dire is the situation in terms of we not having the infrastructure to be able to keep that amount of reserves?
So one, you need storage facilities. You need storage facilities that are huge than what the capacity that we currently have within the entire Eastern corridors. I want to talk about the Tema Enclave there, including Chase, Tor, the Mamiwata, the bus facilities. So you need about five times that capacity to hold the 5 months reserve that we are talking about here. So clearly you don't have that. You also don't have the pipelines to push those products to wherever you want to do that. Or if you even decide to keep them on the vessels, those vessels cost huge. So it's always the big players that do that. And with regards to nations, with exception of the China and maybe the America, not many countries these days hold those reserves. So you check the BPs and the Shells all over the world, the Vitors, they are the ones who hold these reserves for
the private entities, right? Yeah.
The private entities, and their commitment to their nation, and like our commitment to Ghana to keep it afloat with products. So you check during the Russian-Ukraine war, and then all the crises that we encountered within the 2022 there was never an issue of shortage of products, because the chunk of it sits with the private sector, who have committed themselves to these long-term contracts with their IOTCs that you cannot breach and say that, oh, the market is down, and when I bring in the product, I'm going to make also, so I'm not going to. So that is the good side of it. And then also on the government side, I don't think Ghanaians will ever forgive any CEO of any of the state entities who say that he is taking a position for a buffer to store a petroleum product for, let's say, 5 months, when the prices are, let's say, $60 that we think is low. And then when it is time to freshen up the product, international price has gone down to $40 or so. They will charge you for causing financial losses.
That would be a wild projection, you know.
Yes. Yeah. So you check well, none of the state commodity entities are able to hedge, because previously those who took hedging position and it didn't went well, the narrative around it was not.
I'm sure you're talking about Cocoa, but Dr. Patrick Kweku Ofori, thank you very much for joining us here on Beyond the Numbers, on Big Analysis. We are really grateful that you could help us bring industry perspective to this conversation. This has been Beyond the Numbers. I did this with Winston Taki and Caleb Ziblim. We'll be back on Wednesday with the same, Beyond the Numbers, where we'll tell you where, the world has gone to, the impact analysis, and the story so far, Winston.
Amazing. Thank you for watching. Have a good business day. Bye-bye.